Okay, in the last video we looked at the costs and benefits of a free market for efficiency. The benefits being that they allocate resources to where consumers want them, but the negatives being that perhaps sometimes that's not in areas that are beneficial for society. So sometimes we over-allocate to areas where there are negative externalities and under-allocate to areas of merit goods where there's positive externalities. In this video we're going to look at the benefits of free markets for equity, our other goal. So unregulated markets, again, markets with no government intervention. The best thing about them is they generally promote growth. They generally promote economic growth because there's no government restrictions that are raising firms' production costs. So, for example, if you're running a company, there's a lack of laws and regulations like carbon taxes, which increase costs of production, which are obviously designed to reduce carbon emissions. There's no measures to limit pollution. There's no fines or taxes. There's nothing really discouraging production. Even if that production's in areas that's going to cause pollution and negative externalities, there's nothing stopping or restricting higher production levels. So this should lead to higher rates of economic growth, and the benefits of higher rates of economic growth is that then that flows on to employment. Always be mindful when you're answering questions about equity, the best way to achieve a more equitable distribution of income is to get that bottom quintile into a job so they're earning a factor income. So if we can promote higher rates of economic growth because there's no restrictions on growth, then that's going to help to create employment, and as a byproduct of that, it should help to reduce unemployment rates and lead to less poverty within society. So because there are no regulations like OH&S, equal opportunities, fines for misleading and deceptive conduct, none of those things are in place, so there's nothing working to raise firms' costs of production from a government point of view or hamper growth. And that leads to increased employment, and that leads to less people in absolute poverty. Problems of a free market for equity. The problem is, even though that's good for promoting growth, there's really no protection for low-skilled workers. So there's no minimum wage for people with a lack of skills, and that can lead to more inequality. Your low-income earners, despite the fact that we higher employment, there'll generally be lower wages because there's nothing forcing businesses to pay unskilled workers higher wages. So they can be have a negative impact on equity because there doesn't have that incentive for firms there's nothing stopping them from paying their workers less. There's minimal protection for some income earners who may be exposed to predatory pricing or fraudulent behaviour. So there's nothing stopping firms from potentially engaging in fraudulent behaviour. There's also no safeguards stopping large businesses, particularly in concentrated markets, so where there's only a few major suppliers, from restricting output to try and raise their prices. So, for example, an example of that might be in a free market, the big petrol companies might have an oligopoly, and they might be engaged in things like price signalling, where they try and communicate prices to each other so they can keep their prices higher. They may collude, so they might get together on a Friday and say, all right, the price of petrol is $1.50. We all agree with that? Good, we'll charge $1.50. That can exist, that's an illegal activity, but if there's no government intervention, then it can lead to restrictions of supply, it can lead to collusion, and that's bad for equity because it's going to cause the price of these products to go up, and if they're necessities, it will definitely have regressive impacts. So if we're increasing the price of petrol and other necessities, that's going to have negative impacts on equity. So there's a limited protection for unskilled workers, there's minimal protection for those that might be exposed to predatory pricing, and the monopolies and oligopolies that are present in these markets may lead to firms restricting supply, which has and colluding to raise prices, which can have negative impacts on low-income families. So to sum up, benefits of a free market for efficiency would be demand and supply generally allocate resources to where goods that are in demand that meet what consumers want. This ensures that it meets consumers' wants and needs. That's allocative efficiency. For technical efficiency, the desire to maximise their profits in a free market should encourage firms to be more productive so that they can, or technically efficient, so they can keep their prices down. Firms are always going to be looking for better ways to produce, better production techniques so they can outdo their competitors, or they may go out of business. So they're the benefits for a free market for efficiency. Weaknesses is that market failures occur. They can over-allocate resources to some areas, under-allocate them to others. Some undesirable goods like alcohol and cigarettes are overproduced. Others are under-allocated like public parks, education and health. There can also be a limited competition in the market, which can lead to higher prices, and that can lead to inefficient allocation of resources as well. In terms of equity, the negatives, there's little protection in minimum wages.
there can be predatory pricing, and there can be higher prices amongst concentrated markets. But the benefits are that because there's no taxes or anything increasing production costs, it should help to create employment and reduce poverty in the economy because of increased growth. Thank you.